My name is NURSYAHIRA NABILA binti Fazali, and I am going to talk about financial ratio analysis. Liquidity ratio is important to determine companies' ability to pay off current liabilities without increasing external capital. SYF Resources BERHAD current ratio is 1.39 times, lower than industry average of 3.43 times. For exit test ratio, SYF Resources BERHAD is 1.12 times compared to 2.71 times of industry average, indicating this company is relying too much on inventory and assets to pay off its debts. Both current ratio and exit test ratio are lower than industry average. Based on this computation above, SYF Resources BERHAD does not have enough liquidity, thus has difficulty to pay their current liabilities. Leverage ratio is important because company relies on combination of equity and liability to finance their operation. Leverage ratio also can be used to measure companies' operating expenses to evaluate how changes in output will affect the income. Below, debt ratio is 39.07% is lower than industry average. For debt to equity ratio is 64.12%, higher than industry average of 36.8%. For time interest earned is negative 9.49 times, lower than 61.24 times of industry average. Based on computation above, SYF Resources BERHAD heavily relies on equity to finance its operation. Profitability ratio are used to value companies' ability to generate income from operating using data from specific period of time. Below is gross profit margin for SYF Resources BERHAD, showing is negative 13.93%, lower than industry average of 30.6%. Next is operating profit margin. SYF Resources BERHAD has negative 21.51%, which is lower than industry average of 0.9%. For net profit margin, SYF Resources BERHAD is negative 18.33%, which is lower than industry average of negative 1.7%. For return on assets for SYF Resources BERHAD is negative 11.21%, which is lower than industry average of 7.5%. For return on equity, it is negative 18.41%, which is lower than industry average of negative 1.2%. According to calculation above, SYF Resources BERHAD profitability ratios performance is not very good as compared to industry average, reflecting company's lower efficiency of its operation to generate revenue.
Hi, my name is NURUL IZZATI. In this video, I would like to share about the explanation of financial ratio analysis of SYF Resources BERHAD for the year 2019. First, liquidity ratio. Under this ratio consists of current ratio and exit test ratio. Both of these ratios shows the decreased amount compared to industry average. Decrease in current ratio indicate that in 2019, there are increase in short-term debt and decrease in current assets as compared in year 2018. It shows their inability to generate cash. Current ratio can be improved by early payment to debtor that able to reduce the level of the current debt. Decrease in current ratio because of the liquid asset did not enough to cover their current liabilities and their current assets are highly dependent on inventories. It can be improved by converting the inventory to cash or account receivable. For leverage ratio, all the ratios show the lower amount compared to industry average, except the debt to equity ratio caused by aggressive asset financing with debt. The company should modify this ratio into long-term debt equity because it will influence their ability to pay debt. Lower debt ratio indicate the company assets are financed by equity and they should maintain this ratio. Lower time interest ratio indicate not enough cash are generated from operating earning. Both ratios can be solved by reducing amount of debt and interest to increase their profitability. There are 5 types of profitability ratio. For ratio of gross profit margin, operating profit margin, and net profit margin, all these ratios show the negative figure that are lower than industry average. Low gross profit margin is due to increase in cost of goods sold and decline in revenue. Negative operating profit margin indicate that for 1 ringgit of revenue equals to loss of 22% of operation. Low net profit margin is because the cost of production exceeds the total sales. To improve this ratio, the company should increase the price of goods sold and reduce the expenses such as direct costs and overhead costs. Return on asset and return on equity also shows the negative ratio that are lower than average ratio. Negative return on assets indicate that they are not making enough income for their assets as they invested to the asset that are failed to generate revenue. Therefore, it is important for them to purchase assets that match with total production. Negative return on equity is due to high price acquisition of funding. The company should increase the profit margin to increase the equity.
Assalamualaikum everyone. My name is FITRI FARHANA binti FATKHUR RODZI. In today's video, I'm going to explain to you guys about trend analysis and an example on how to calculate trend analysis based on SYF Resources BERHAD Statement of Financial Position. What is a trend analysis? Trend analysis is the rampant practice of collecting information and attempting to spot a pattern. It is also based on the thought of what happened in the past of the company and give an idea of what will happen in the future. As you guys can see, I already put an example of non-current asset and non-current liability of the financial statement for 2 years, which is 2018 and 2019. For non-current asset, we have property, plant and equipment, inventories, and intangible asset, while for non-current liabilities, we have deferred tax liabilities, bank borrowings, and finance lease liabilities. To find the percentage, you need to divide the amount of asset with the amount of the total asset and multiply by 100. For example, the amount of PPE 93,749,000 divided by total asset for the year 2019, which is 193,694,000, and multiply by 100, and you will get 48.40%. Then we can proceed to calculate percentage for all non-current asset and non-current liabilities for the year 2018 and 2019. How to know the trend analysis? Okay, there are 3 conditions that we need to consider, which is increase, decrease, and no change. So what we're gonna do are, we compare the percentage of the 2 years, 2019 and 2018. For example, for inventories, increase around 23% from year 2018 to 2019. For the intangible asset, it is no change because there are no amounts stated for 2 previous years. We just calculate percentage for 2019 and we can't compare to any percentage from previous year.
Conclusion on liquidity ratio. Both current ratio and asset test are lower than industry average. SYF Resources BERHAD may face difficulties to meet the obligation on time. To improve, firm can optimally manage receivables and payables or cut unnecessary costs. Moving on to leverage ratio, higher debt ratio showed SYF Resources BERHAD has greater financial ratio. debt to equity ratio is higher than industry average shows that the firm has aggressively financing its growth with debt as well as resulting in greater interest expense. When the interest expense is increasing, the firm may not be able to pay off as well as increase the chance of bankruptcy. To improve, firm can increase the revenue by increasing the prices. Next is profitability ratio. SYF Resources Berhad profitability ratio is worse compared to industry average, reflecting lower efficiency of operations in order to achieve the income. To improve, firm can remove unprofitable products and services or reduce overheads so they can utilize their resources while reducing costs to generate more revenue.